Welcome on this November evening, 6th of November. My name is Mike Hamilton from Trade the Easy Way, and I'm just going to share with you my prep for the week. So let's start off with the S&Ps, and huge move into October resistance in next to no time at all, really. Just fired right back up and bumped into a lot of resistance. So we are incredibly flat today. We're not going anywhere today. Very, very little movement, certainly in this index anyway. So let's have a quick look at the Nasdaq. Just remind myself what the Nasdaq looks like as well. So that is pulling back a little deeper. So we topped out in August and have taken this retracement down to a low of 14,580, and so if we can pull back to the 15k mark, then and hold, then we could go back to the August highs. Otherwise, if we really start to close underneath these recent lows, then we are toast. Quick look at the dollar. Let's just keep this nice and short. So here's why this is pulled right back, because the dollar has, or one of the reasons, because the dollar's come off. So the normal healthy divergent relationship of dollar and indices is surviving. Basically, one of the main reasons for this move is the bond yields have come off the boil. So as the bond market has calmed down and there's less aggravation because of the threat of incredible high bond yields, so the market has recovered. Okay, so let's have a quick look at the Footsie. We've got UK GDP on Friday. So the Footsie is struggling. Unlike, we did not see the push up in the Footsie that we saw in the US index last week. So we could be treading water till we get this Friday GDP out of the way. In the meantime, the pound's had a good day. Let's have a quick look at the pound. Yeah, so actually, well, yeah, Friday we popped up. Yeah, it's not a good, yeah, it was a flat day today. It was Friday, it popped up. So if that retraces and holds support, then we could break up through this 124. I'm just overall, maybe I'm too bearish, but I'm just bearish on the UK at the moment. I just don't think. I think there's a lot of structural issues coming into the UK economy, but let's wait and see. Let's just I will shelve my bearishness and just let the markets tell me what they want to do. Gold has pulled back today after gold's just been very bullish consolidation. Bullish consolidations are normally over after a significant pullback, so I would expect at least 1966, possibly go under 1950. Here we are at 1982, just about holding on. But yeah, if this is a bull flag, we need a significant dip to get the volume back in. This gap down here at 1835, judging by the price action at the moment, I suggest that may not get filled for quite a while. Oil is coming off support. If I can grab the chart. Yeah, so we've got all this support here at 80. Here we are just under 82. This is, if we bash into that Friday resistance, this could roll over. So could be a quiet week. Not a lot of data. We've got Aussie rates and UK GDP, not a lot else. US bond auction on Wednesday. Right. Let's have a look at commodities and we'll go straight into a few stocks I've got lined up for you. Corn is really bottoming quite nicely for me. But it's got it all to do. Let's update this trend line. Decent volume came in on Friday. We didn't close above the 8-day average, so we're bumping along the bottom. But to me, what we're seeing is, to me, this is a very subtle head and shoulders. Shoulder, head, shoulder. This is the neckline. So basically, if we close above that neckline, then we should recover to at least 550 plus. But I'm very bullish these commodities. So we've talked about gold and oil. Natural gas is weak. This is typically when natural gas would finish. All the big contracts are pretty much in place now. So on a typical cycle, I would expect natural gas to pick up in April, May, June, and then top out in this early November. And so far, that is what is happening. We bottomed out in April, June, sped up to last year's lows, and now we appear to be coming off. So that's all pretty normal stuff. Let's have a look at. I've got to look at this orange juice. Yeah, we've finally seen the orange juice come off. An explosive move up to 41, 42, and a big jolt down as the orange juice just went ballistic. Just got way overbought, and we got a very aggressive push down. Right, stocks I like. Quick update on the miners. So PanAfrican is consolidating. Today it's touched its 8-day average. So the theory goes, if that is all intact and that trend line support is intact and the 20-day average is intact, we should start to see this reach for at least 17 or 18. That's in my book anyway. So rather than dash through a lot of miners, let's get on to some other interesting stuff. I like Vodafone. I think Vodafone is worth buying a dip. Any pullback to 75, 76. I think we'll at least get into 83, 85 plus. BT is picking up nicely. So with all this 110, 111 held, at the moment, it's got very shallow pullbacks at the moment, but any test of 115, at the moment, I have to say that looks unlikely. If you see 120, I would suggest that might be a place you might want to buy. The banks all look as if they are buyable. Obviously, we've got GDP on Friday for the UK, so this just got to be really cautious and don't fill your boots on this, because that and Lloyd's is a very similar chart as well. Yeah, there's one more for financials, and then we'll move on. I think Prudential was way oversold down there at 820, currently just under the 9 mark. So any dip into 850, 860, I think this is I think this one is overdue a bounce. all we're doing at the moment is pushing into that trend line. So if we go back under 880, we open and close under 880, then be very careful. But it is possible. Maybe we'll see this on Friday. If the market doesn't like the data, we could come and see this 820 again. At which point, if that holds, I mean, because we will then form a very nice structure to this price. So it could be well worth your while just sitting on your hands this week and seeing where we are going. Right, let's have a look at. Let's get an update on DRAX. I want to rattle through a few here. Yeah. So we popped up to 370 and now we're popping right back down again. But if we come in contact with these lows, 335 and hold, then I think it's a buy. Otherwise, we might come all the way back down to this breakout area. You see this a lot these days in this market. So we bust up from 294. It is not beyond the realms of reality that we could come all the way back to 294 on this one. So again, if the markets get pretty agitated and drop, and this one drops back into 294 and holds, then I think that is a golden opportunity. I want to look at. Oh, let's have a look at this one. This is a recovery stock. Look at the volume coming at these lows. Oxford Instruments. Not long ago, we were up there at 28.40. Again, if we come back down, the volume is very nice down there. I think that is a prime reversal candidate. The other ones, let's look at, we looked at GSK last week. This is trying to hold this 14. If we close above 14 or 15 this week, I think this one can recover. But look at this, we broke out on the 8th of September and we've peeled right back. So this is a classic example of a market that's done a boomerang, which is why I think DRAX may do that as well. Yeah, here's another one. We haven't talked about this one for a long time. I think DRAX is a reversal candidate. If we pull back to close to the £4 mark on this one, I think DRAX could really pick up. See, again, we've boomeranged. We broke out on September 21, and we've done a complete boomerang back to the breakout area, which is why I think this is a very interesting stock and well worth tucking some of this away. But I continue to repeat that it could well be worth your while sitting on your hands. Let's look at Rackets. Volume coming on Rackets. This is a key area from this time last year. So if Rackets holds here, be patient. If that closes above 55, I think Rackets can work. And I think are you in Hargreaves, Andy? I seem to remember you saying you're buying this one. Have I got that right? Yeah, I thought I had. Yeah, I am liking this one as well. Could easily see that going back to 7 again. But I think that is a good one to put away. It's good solid stock with a decent balance sheet. So I'm very much liking Hargreaves, DRAX, Vodafone and BT. And that's it. Look at, I mean, let's just look at some US stocks because the US stocks have just gone balmy. There's this pattern is all over the place in US stocks, US techs. This is ROKU. So it's down there at 54.80, and we're up here at 82. We're just, wow. Be careful of these gaps. I mean, the fact we've gapped up and we're holding what's important with these is to box these off. You see a pattern like this, always box the gaps off. Now, as long as we stay above that gap, as long as we stay above 79.20, I think this is viable. If we close underneath 69.60, then get out because you're at least going to do a gap fill down there at 60. At some stage, that gap will be filled. Right, unless you've got anything else you want to look at, I'm going to close it off there. QQ has had a little run. That's pulling right back. What else is there? Let's have a look at Pfizer. There seems to be a lot of volume. I like Pfizer. I think there's a lot of volume coming back into this one. Sorry about that. Right, I'm going to leave it there. Be careful. Have a good week, and I will talk to you soon. Unless you want me to look at anything else, I will say good evening. Farewell. Brilliant. Nice, short, sharp session. I will see you again. Thanks, guys. Bye.